Good morning and welcome everyone to the Caseware Get Ahead course, Auditing Employee Cost with Audit International. This is Sandrine Permar speaking to you directly from Mauritius. I'm delighted to be with you today for this 3-hour session on how to audit employee costs with Audit International. In the course of today, we are going to look at who is our client that we are going to audit. We're going to see all the sections within the employee cost. We're going to go through the risk assessment procedures and our work program. A polite reminder to everybody, your all microphones are muted and cameras are currently turned off. The webinar is eligible for an hour CPD, so to earn the CPD, please make sure that you stay for the full duration of the webinar. If you lose the signal, please exit and enter back the webinar, or rather use the browser, use the app rather than the browser. We'll make sure that the recording is made available to you in a week's time. Alternatively, you can also go to our YouTube channel to look at the Get Ahead videos. Please make use of the chat question panel to interact with us. We encourage you to participate by submitting your question through the question panel. We'll try our best to answer the questions during the presentation, but in this particular session, auditing employee costs, it is going to be quite, there's a lot to cover. So if we don't have time, we'll cater time at the end of the presentation, or after presentation, we'll send you an emails accordingly. So before we go into who's our client, I would like to quickly launch a poll to understand whether you have all been able to download today's material. Please do let me know using the polls whether you've been able. So if you have not yet done it, I have inserted in the chat box the link. Let me do that again. The link to the smash.com from smash.com link where you can download all your course materials. I'm so glad to see more than 50% have already downloaded. For the rest of the 40%, please use the link from the chat box to download your course material. All right, I'm going to close the poll now and give you a few minutes to download your course material. It's in the chat box. Thank you, everybody, for your participation. I'm going to launch another poll. I'd like to understand whether you have attended to all our Audit International training, or is it your first one? Have you attended only 2 or 3? Wow, I'm excited. I see most of you have attended all. That's great. Okay, you've attended 2. That is fine as well. Wow, 80% of us have attended all the training sessions. How exciting. I'm going to leave the poll open for 20 more seconds. Okay, for one of us, this is the first time. So if it is the first time, I'm gonna try to make sure that I'm not going to go too fast, but I can't go too slow as well, guys. You'll get the recording if ever you feel a bit lost, but yeah, feel free to use your the question box to ask your questions. Okay, so I'm going to close the poll. Thank you guys for playing the game, and I'm really looking forward to this session. Whilst you guys are busy downloading your course material, Let me take you to the next slide. So if it is your first time you're with us, or if you're the second time, we are currently auditing a client called Wrap Up Manufacturing Pty Limited. If you didn't work on the file, on the audit engagement file on Caseware yet, it is fine because we are not overflowing from the other sessions. The older sessions have been performed in other webinars. For today, we are doing the employee cost in isolation. Okay, so the employee costs which carry forward from the other expenses, but don't worry, I'll take you through your risk assessment. I'll quickly mention your other expenses as well. The financial year end for Wrap Up Manufacturing is 30th of April 2023, and the accounting framework is IFRS for SMEs. I've used the full IFRS, but yeah, it depends on what is the template that you have. The accountant is Mr. Andy Crack, who we've been speaking a lot since 2 weeks. The poor guy, he must have heard about us, you know, with all the questions that we have. Okay, I'm just buying time just to make sure that you download your course material. Now, next is the process flow. So if it is the first time that you're getting into this webinar, we've explained the purpose of our work with the process flow. Just a little repeat for the rest of us. So the financial statements is what we are auditing. It is our end product. We want to issue an opinion on the financial statements. We have seen since the session 1 of this series of webinars that the financial statements come from the trial balance and some other information that are not necessarily found on the trial balance. It can be a contract, it can be other information. The general ledger flows into your trial balance. The trial balance is essentially a summary of what has happened in the general ledger. In terms of employee costs, the payroll system is what gets into the general ledger. So the general, your general ledger will have components of what has been processed in the payroll system. So generally, employee costs will be in a separate system. So it will not be processed directly into the GL. So your clients might use a separate software where they run and process all the payroll information, which get then journalized or journaled into the general ledger. It just depends on the different types of entity. That's your work to go and understand how this is the process for your client. Sometimes if the client is small, based on my experience, they can use an Excel spreadsheet to do all of their payroll, but still they need to put all the information into the general ledger somehow, because it needs to feed back to the trial balance, it needs to feed back to the financial statements. Okay, but these days, most of the companies have a proper payroll system. So it's, we can call it a parallel system where everything happens in terms of payroll into the system where you have the employment records. For example, the contract with an employee, leave records, the bonus payment gets processed into the payroll system, which then gets journaled into the general ledger. Now, I've been talking with that employee cost activated, but that's fine. Now, it all starts, the action which happens right at the beginning is the client, your client has hired an employee, or the client brought in a casual laborer for the day to do some work for him. And then you still have, even with a casual laborer, you still have employment records. Remember, like a payment, because you have to make a payment to them. You need all their detailed information. Just want to have you to keep that in mind so that you can use that knowledge throughout the training. Okay. In terms of the financial reporting framework, so again, just a reminder to everyone who were there since day one, there are three very important concepts to remember when we do an audit. The accounting framework being, in our case study, either IFRS for SME or full IFRS, this is which will tell the outline what needs to go into the main statements in terms of how things are recorded initially. So at what value and when they can be recorded, and that gives us also the presentation and disclosure of your financial statements, which also comes from your accounting framework. Are you using IPSAS? Are you using IFRS for SME? Are you using your full IFRS? All of this is guided by this accounting framework. So what we need to do when we are auditing, if you take a look at the bottom left of my screen, when we are auditing, we need to consider both what is in the accounting framework and what is in the financial statements. So we are auditing what is in the financial statements, but we want to make sure that the financial statements are put together in accordance with the accounting framework. And that's the beauty of our profession. It's all written, we've got guidance in terms of what the client should put in the financial statements. And again, in Audit International, the accounting framework will be selected by using your template when you create the engagement file. You can review that as well in the document 455 in your FSA. And we also have a touch on accounting policies in the document 510, understanding your entity. And then throughout the audit, you will consider what is in the accounting framework. You'll always have that in mind when you're auditing the items in the financial statements. Alrighty, so now let's get started in the file, and then we'll come back to the slides again to have a refresher. So I'm going to escape that slide and go back, not go back, but go to my wrap-up manufacturing limited. And before I go to and start opening my different documents now, guys, we're going into the serious part of this training session. I would like you to use the hands raise option in GoTo just to give me a sense of whether you have been able to download the course material. I'm going to give you 1 minute to raise your hands on GoTo. Just let me know whether you have been able to download the course material and to open Wrap Up Manufacturing Limited, 30th of April, 2023. Thank you, Tariro. Thank you, Shelter. Thank you, Kialiboga. Okay, I'm going to give you guys 1 more minute. Thank you, Edmund. Thank you, Elari. Rohan. Hello, Rohan. Seen your name several times. Thank you. Thank you, Shakiru. Hello, Yusuf. I see your name. I remember your question from yesterday. We did not forget you. You will get your answers for cash flows and remapping. Guys, if you've just joined, I would like you, thank you, Nelson. I would like you to use the raise hand option to guide me whether you've been able to download your course material. It's in the chat box. Thank you, Sheila. Thank you, Harsh. Look at Lego. Thank you, Stephanie. In 60 seconds, I'm gonna move to the different documents on Document Manager, and a polite reminder to everybody, if you've joined just now, we are going to go in a steady pace. It's not gonna be slow, it's not gonna be fast, but I will not be able to go back to the different sections if you're not able to have these sections open in front of you. You will have the recordings and you can go back to the recordings and check. All right, thank you everybody who have raised their hands. If you didn't, I'm trusting that you are all in control, that you have your Caseware working paper file open in front of you for Wrap-Up Manufacturing Limited, the audit engagement file that I have shared with you in the chat box, or you must have also received a marketing email with the different documents. So, all right, so let's just go through the planning section just to show you a bit of what I've mentioned before in terms of the financial reporting framework, where you're going to go through your accounting framework, the audits, and the financial statement, how are these interlinked. First of all, you can also go through your document 455, preparing risk assessment procedures. If you can't find that document, you can do Control F 455. And if ever it says you are on the last, click on yes, and then go back to the top. I've double clicked to open the document. That's your document where on procedure 7, it's guiding you that you should go to your FSA, your financial statement area, to identify your material classes of transaction account disclosures, and also how to treat your different material items. If we use that knowledge, we go to the FSA, you will then be able to go and scroll down to the FSA, locate operating expenses. Actually, this is what we are looking at today. And a reminder, if it is your first time on this session, your financial statement area allow you to navigate your material account balances. When you scroll to your operating expenses, you can also double click on the current year balance of the operating expenses. I trust that look familiar to you from the last session. It will list for you all those account numbers that you have mapped to the expenses. Now, if you look at your operating expenses, we've got here some categories, some account numbers relevant for salary, for employee costs in terms of company contributions, bonus provision, salaries, directors' fees, and emoluments. If you joined us last time, or if you've watched the recording, we did go through a lot of time. We spent a lot of time in terms of analytical procedures. We went through the planning section, but today the focus will be employee costs. And if we go to, again, back to the document manager, these are the tools that you will use in Audit International. If you now go to your lead sheets, because these figures on your FSA is also grouped into the lead sheet. The lead sheet for operating expenses is found under lead sheet folder, folder 700 income statement, 750 operating expenses, and double click to open your operating expenses. So if you look at, actually I'm already on the right section, but when you open your operating expense in it, and if you scroll down a bit, you will have a list of all the accounts under indirect employee costs for all the account numbers and employee cost details at your client. If we look at the amount change and percentage change for the year, there doesn't seem to be any unusual changes, which was also, I've given you a note bottom of your screen, no really changes noted from here. I've also added a few little points. If you recall from your session, or if you've opened the Caseware working paper, I've added a few little points about employee costs, which we have noted that remuneration other than employee costs consists of consultancy for business purposes, will be inspected for purpose of tax calculation, part of the tax audit. So what else did I insert here? No, that will be enough. What we also need to consider, remember, the client that we are auditing is Wrap-Up Manufacturing Limited. When we were doing in the document 510, understanding the entity, when I think it was the second session, when we were understanding what is Wrap-Up Manufacturing, who is that client? It is a manufacturing entity. So usually for a manufacturing entity, the employee cost can be or will be split between operating expenses and cost of sales. And these two, salaries and wages, will come out of the payroll system. So I would like us to write it down here. I would like us to say, Wrap-Up, just thinking what to write, Wrap-Up Manufacturing is a manufacturing entity. Employee costs are split between cost of sales and operating expenses. And we're going to check that theory just now. Operating expenses, and that will be it. Now, where do we find the split between, I'm also going to copy that and paste it into cost of sales. Where do we find and test that theory? So if you go back to Document Manager, okay, and we'll look at cost of sales, lead sheet 720, double click, and if we scroll down a bit, going to expand, you can expand the account column, going to expand it, we can see direct employee costs. So I'm going just to paste what I've written over there, that Wrap-Up Manufacturing entity, employee costs are split between cost of sale and operating expenses, just for me to remember that. Okay, so we can see we've got here some contributions, wages for our team working in the manufacturing industry, the manufacturing plants. And yeah, these are the direct employee costs sitting here. So these costs are directly related to the manufacturing process. You know, that process to create the goods of Wrap-Up Manufacturing. And maybe you can ask yourself, but should have been everything under operating expenses and our story. So what we've done at the creation of this engagement file, the employee costs were mapped, the direct employee costs were mapped under cost of sales, the indirect one was mapped to document manager. Okay, now if you go back to the document manager, and if you look again at the folder 750 operating expenses, the lead sheet 750 is where you will have all your expenses, and you have seen your employee costs, and we've seen that these employee costs will be your administrative employee costs, as I've mentioned, which has been mapped to operating expenses. And why? It is because it's not directly related to manufacturing of the goods, and because also the company usually will have some team members who are not involved in the manufacturing process. They might be involved in sales, or can be the accountant salary, or the director, the director, or anyone who runs the business as well will be found under indirect costs. So now what we would usually need to do in this section is to go through a system description. And this is what I was trying to do by explaining to you. We don't have time to read the system description. If it is your first time with us today, a system description will tell you what you need to know in terms of the functioning of your client. It's going to tell you, okay, we've got some people working into the manufacturing plants, some people in our office. It's very, very important. It's a very important document, which is used by you to document your risks, right? To document your risks in your work program. Because I'm conscious of time, we don't have the time to go through it. But if you're curious, we did it in the operating expenses, or I think the previous one. You can refer back to the recordings of what is a system description. How do you read a system description? How do you request? I think it was for inventory, if I'm not mistaken. We went through what's the inventory. The same will apply. Now, we are going to assume today that we've read through the system description, because I've already explained everything to you. I'm sure that you're not saying, no, we didn't. But no, Sandrine has explained everything to you. Now, what we are going to do is use what I've explained to you so far and look at the risks that was documented in terms of employee costs. Where do you find risks in Audit International? There are several places. You could either, if I go to Document Manager and go to Risk Assessment, your risk report 520E, you can open that one. Just give it a few moments. Or alternatively, I'm going to show you different areas where you can find all your risks. Okay, so this is your risk report where you've got all your financial statement areas with all the risks that have been documented for you. If you look, for example, if you scroll down 520E operating expenses, you've got all the list of risks that were documented for that financial statement area. So remember, we had just a little going back in time a little bit. We've documented risk in terms of operating expenses, what could go wrong. We've also scored the risk the inherent risk scoring. We've provided with the score, and also the RMM scoring has pulled to this line item. Now, these were a few risks that was identified. You also have, next to your risks, your assertions. So I think I haven't selected the assertions, but the principle would be, if I go, for example, to employee costs recording, if you double click here, employee cost recordings, that's a risk. So how did I get to that risk? Is by reading the system description, which tell us actually essentially how the process of everything. So if I double click on that risk, you can clearly see that the accuracy assertion that has been selected. Okay, here we go, operating accuracy evaluation assertion. We're going to perform procedures to test risks of misstatement here. So these are all the risks. Employee cost recording, expenses may not be recorded in the correct period, the classification. I'm looking for director remuneration, misstatements in your financial statements. Of course, you're gonna do yourself a favor later on and go through all the risks. Alternatively, if you feel more comfortable, you can also go back to the FSA. Another way to look at the risk will be to scroll to the right next to your operating expenses line and go to your work program, your audit procedures. In your audit procedures, what you will have on the top part, you will have all the risks that you have documented for your operating expenses, which I remind you include employee costs. So usually, just a recap again, the system description should tell us how the process of, for example, when you hire someone, how do you keep employment records? What about your contract leaves? How do you get the information from the payroll system to the financial reporting, the accounting system? What is the payroll system used? Who is in charge of the payroll system? And also, how do you reconcile what's in your general ledger, what is going to trial balance, what is recorded on financial statement compared to the parallel payroll system? All of these information are coming from the system description, and it is from there that I've been able to do the risk assessment here. So just also a reminder, we can also link our risks to the audit procedures that we have bottom of the screen. So for example, and I'm just quickly going to show you how to link a risk. For instance, if I go to general ledger, I just want to give you a sense of how to link your different procedures. I'm going to link the director's remuneration. If I scroll down, we've got procedure 14, director's remuneration. And if you would recall, there's a risk in terms of director's remuneration that has been raised on the top. These are the procedures that we will perform to address this risk. To link a procedure to a risk, you will right-click over the procedure, select link risk to a procedure. Guys, usually your supervisor will do that for you, but it's also important. We want you to get ahead, right? We want you to be the next supervisor. So you must be also able to know how to do that. I'm going to right-click, select link risk to a procedure. It will open all the risks linked to my work program. I'm going to select director's remuneration. And boom, here you go. It's going to appear on the right-hand side of your screen. It will also appear in your 520E, which is your risk report. Okay. Just a quick, I just wanted to make the link between those risks and what you have as procedures. How are you going to address those risks? So remember, those risks were raised in the planning stage. Someone did the planning for us. They've got an understanding of the entity. They've raised the risks. Usually, they will link the risk to the procedures. And you can also have a look at the risk scoring. For example, your director's remuneration restatement of financial statements, RMM, is sitting at medium risk. Your employee cost recording, existence, and accuracy is sitting at medium risk as well. So if you would remember, let me scroll down now to procedure number 4 on your audit work program. We performed the procedures relating to operating expenses. Now we are going to do the procedures for your employee costs. The first line items is telling us to reconcile to company per the payroll records to the employee costs in the general ledger. So let's quickly go back to our slide to really understand. So remember, basically what we want to look at will be, what we want to look at will be, what we want to see, we are auditing the financial statements. But in order to get there, we need to travel back to where it originates from. So we are wanting to look at what's in that parallel system, what is in that payroll system, where you have all the details that's on what's happening with the terms, with the employee costs, with the contracts, all the details contained in the payroll system, but will also filter into the general ledger in some way. And that's usually done through the journal entries, which are parsed to bring in the information from the payroll to the TB. So what we need to do right now is establish if we are going to be working with the correct thing and auditing the correct numbers. We want to make sure that the source payroll system, general ledger are complete and accurate. So we are going to first see if we can use the parallel system for testing. So how are we going to do that? We are going to reconcile two things and see where the differences lie. We are going to look at the payroll system, and then we'll confirm that the figures tally with our GL. When we are happy, go for detailed testing, okay? Because you're not going to do all the work, it's not tallying, and then come back to the source. Now, let's escape this. I'm going to go back to my Caseware file, a Caseware working paper file. Just quickly grabbing something to drink. In 30 seconds, be back. All right. So remember, before I jumped to explaining again the link between financial statements, TB, GL, and source. The step 1 is to reconcile cost to company per payroll to the employee cost in the GL. So we want to see payroll and GL. If you go to your Caseware working paper, there is a document called Employee Cost Reconciliation Working Paper. That's the document 752. Please double click to open that Excel. Okay, so we have already completed the top section for you. Fletcher Inc., that's the name of our audit firm, of our practice firm. That's the name of our engagement on the top. Your year end, and this is the schedule of employee costs. A reminder for those who were here since day one, and if you're new to this session, that working paper is given by your audit firm. This is what you're going to usually fill in. If you're not sure, please ask your supervisor. I have also already inserted for you overall materiality, performance materiality, and trivial amounts. So what we want to do now is to reconcile between two systems. We want to cover, not to cover, but to reconcile our general ledger and the 12-month analysis report. So the source here is going to be general ledger and 12-month analysis report. Sorry, guys. I'm having trouble speaking today. I'm so excited because it's so interesting. And by the way, you must have noticed as well, I've inserted in the cell I1 the document number, which is 752, which is the reference of that working paper, the same thing as your document manager. And once again, a reminder to everybody that referencing is usually done in red on your Excel. Now, obviously, this is extremely important. I went a bit fast on it, but it is crucial because it's going to tell to somebody who's reviewing your file or reading through your working paper, what is that working paper and what's going on in that working paper. Okay. A polite reminder in terms of materiality as well. You can find this on your 420 document, materiality document, or if you look at, you can look at my screen, you don't need to go over there. If you look at your lead sheet, this is found on the top of your lead sheet, your overall, your performance and your trivial misstatement. This is where you can also find the document. Now, let's go back to our working paper. We are also requested to document how the completeness and accuracy of the population from which the items were selected were verified. This is from your ISA 500.9. So we're going to add a comment and place the information here. Well, we are going to test completeness and accuracy of these items or of the population will be determined through this test. It will be determined through, and if you scroll down a little bit, just to have a look at my screen, through a reconciliation that you're going to do. So there's no release, a separate sheet where we are going to establish the completeness and accuracy of the population. We are going to do that here itself in that Excel document. Again, a reminder, anytime that you have information prepared by your client, yeah, you will have to determine the completeness and accuracy of the population. But you can do that as well in the testing that we're going to do just now. We're going to reconcile between two documents, which is the GL and the 12-month payroll, to establish completeness and accuracy. in order to further testing our objectives, so we can also have a look at our audit work program. If you're a little bit lost here, like the objective is existence and accuracy. So if we have a look at the different analytical procedures here, we've got also existence, accuracy, and valuation. There's also completeness here sitting in this section. And if you look at, I can also go to my risk report. And if you look at the inherent risk scoring and your RMM, very important, the RMM, both completeness, accuracy, and valuation, not both, but all of them are sitting as a medium risk scoring as per, I don't know, your supervisor or the person who has done the planning of this engagement. Okay. So I've added here existence valuation, medium. Here I'm inserting the reference. Where did I get that? I got it from 57010. You could also put 520E, your risk report. That gives also a very nice overview of your risk scoring of your RMM. I could have also inserted here 520E. In terms of the population, where it's not applicable, the sample size is also not applicable. We are going to look at the full GL and the 12-month report. The sample method is not applicable. What is the work program? The audit work program is 75010. I've just shown you that. And the audit work performed is sitting in transactions directly related in operating expenses. And it is, we can put step 1, but I would actually ask you to change it to procedure 4. I'd like you to change that to procedure 4. So that was done on purpose to show you, even if you're using a document that was already pre-filled, make sure that you go through, it is applicable, whether it is applicable or not for your current audit. So that anyone who looks at the working paper can understand what we're trying to accomplish, what we are doing, and also where did we get our information, where it is coming from as well. All right, so first off, when we do a reconciliation, we are currently trying to establish if there is any difference between our general ledger and what we have in the payroll system. So we are going to compare our general ledger numbers. So if you go to the folder I've given to you, actually I need to open the folder. I'm going to open the same folder as you have. If you go to the folder I've given to you, the supporting documents folder, you've got an item called, an Excel document called Wrap-Up Manufacturing GL Operating Expenses. Please open that for me, because we need, first of all, to agree. So if you look at the employee cost tab, we would like to ensure that this GL, that full GL, tallies back to my lead sheet. Okay, we want to tally the lead sheet and the GL. I'm just giving you a few seconds to locate that operating expenses GL. It's the Excel spreadsheet I've given to you. Okay, so now, if we look at, I'm going to split my screen, guys, just to make it easier for us all to understand what we're achieving. So I'd like to see. Caseware working paper. That's not what I want. Okay. Alrighty. Now, we have our, first off, we have here the employee costs from our lead sheet. So if you look at indirect employee costs, under operating expenses is 6,000,060, and under operating expenses it's 11,783. So what you would usually do on that big GL that you have, you want to make sure that it's tallying. So you're going to take all the closing balances and add them up. For ease, and because we want to be more efficient, we are the auditors of the future. I've used Caseware Idea to easily have all my employee costs total in a manner that I can easily check it out. So what I've done is simply summarize. I've used the summarization test in Caseware Idea to summarize my employee cost by cost of sale and by operating expenses. Once I've done that summarization, I can easily look, if you should follow my cursor on the right-hand side of my screen, the control total, we have 11,783. This tallies to my lead sheet. That is fine. And for operating expenses, if you should follow my cursor on the right, we've got a total sum of 6,060,060. Operating expenses 6,060,060, and that's what tally to your TB. So GL and TB, let me show you that as well. We've done the link between these two, the GL and TB. So on your reconciliation now, on that sheet, in the cell E32, we're going to insert our operating expenses. It's in front of me, so I'm going to insert 60,6386, and your cost of sales would be 11,783 or 49.76. That's the total cost, employee cost per general ledger is 17,843. I can also confirm the sum of the two. If I go back to my Caseware Idea, I've added up, or I've summarized literally the employee cost from my general ledger, that summarization of the employee cost, and I've got 17,843 as the control total. So I'm confident that this is what should be inserted in here. A polite reminder as well, we just want to make sure that we add on there, next to each of the figure, we need to help our team members or our supervisor to understand where did we get those figures. That one, 17 million, would agree with me that we're happy we got that from the GL. So I'm going to insert GL over there. And by the way, guys, it needs to be in green. So I'm going to change the font and insert it in green bold. Whoops. Then these two figures, cost of sales and operating expenses, we were able to check it back to our lead sheets. So let's start with the direct costs. It's from 720 in red. Remember, our references should be red. And then the other one is from operating expenses, which is from the document number 750. Okay. Now that we have the total of our employee cost per general ledger, we now need to reconcile back to the payroll system. So for this 6 million, you're going to add it to the working paper again for the 60 million. Okay, now that one is fine. So just quickly checking out where we are going to add that this 6 million, sorry, I'm saying. Okay, no, I think we've done the top part. So it's already, time is flying, guys. And we've done the top part. What we need now is to reconcile to the GL. So I'm going to suggest that let's take a short 10 minutes break. And when we're back, we continue, because I don't want us to break in the middle here. So it's noon on my side. I'm not sure which time it is on your side. Please, let's take a 10 minutes comfort break. And when we're back, we're going to continue with this reconciliation. Thank you. Welcome back, everybody, from that short but sweet break. I hope that you had a chance to take a cup of coffee. I didn't move from my chair, but I'm looking forward to the next part. So, a quick reminder, we've been compiling our figures from GL from our lead sheet. This is what we have inserted on this employee cost reconciliation working paper. That working paper has been given to us by our practice firm. We are then populating the information so that our managers can review our work. So just to finish up on the thought of, we have inserted next to each amount the different how to say that, references. Just want to make sure that bottom of the screen we've got the right legends that is going to explain to my manager what I was trying to achieve. So I'm going to add bottom here. If you scroll down to your reconciliation, we're going to insert GL. Oops, let's put that capital letter. GL would usually mean agreed to general ledger. I'm tempted to take that same color because we're using that particular green. I'm going to paste it there over there. Okay, now, so we know what's on our lead sheet, what's on our GL, that they both agree. Now we know what we need to see is back to the payroll number. We're going to skip the middle of this screen for the moment, and we're going to concentrate on the employee costs per payroll. In the folder that I've given to you, there is also the 12 monthly report split between salaries and wages. Please open that one for me. I have highlighted some yellows. You won't see any yellows on your side, but that's fine. We're going to do it together. So in that document, we can see that this is a report for wrap-up manufacturing. So what will happen is you can go and request from your client, hey, Mr. Client, please, can you give me your 12 monthly analysis report or your payroll report, which shows me your monthly totals for your payroll amounts. So in the payroll amounts, what you'd have would be your income paid to your employees, the deduction on the employee's payroll, the company contributions. So usually you need to ask that type of report. If you're not sure, you can always refer back to your prior file and see what was in the report and how was it called, so that you can also find the right terminology. Or even better, ask a team member if you're unsure what the report would be called or to whom to ask it. Basically, it is a summary per month, per category of incomes, deductions, and company contributions for all the amounts that have gone through the payroll parallel system, with a total for the 12-month period. It's going to be totals everywhere. That should help you tally that. In this case, for wrap-up manufacturing, you've got two components. I'm going to increase my screen. Even for myself, it's small. So you're going to have two components, two parts, two reports in that one. You've got your 12 monthly salaries report for salaries, and then sitting also in your cost of sales, you've got the wages. The salaries is going to sit in your operating expenses, your wages into your cost of sale. We would also need to just establish that the classification is correct. And by the way, everybody, how would you do that? Is to inquire to your client, in that is this wrap-up manufacturing. We will say to all the wage employees, do they work in the manufacturing plant? So are they in the warehouse, in the production area? And of course, they will say, in this case, yes, the ways the employees are all working with the manufacturing machinery, manufacturing the goods, then we would also ask about what about the salaried employees, which is also extremely important, which work with the manufacturing, or are they all administrations? So then the client will tell us which is the case. In our scenario of rapid manufacturing, those within the salary section in operating expenses have only admin roles. And you also will be able to check that we have all of these today. We will also do some detailed testing later on if we have time, in terms of the different employees, what are their roles, etc. So in this report, once again, you've got incomes. I need to make it smaller, I think. You've got incomes for both salaries and wages. In the next little section has deductions. So if you scroll to the right, you should see all the deductions. And by the way, guys, I'm talking about deductions per statutory requirement for South Africa. If you are from any other country, Kenya, Uganda, Mauritius, please make sure that you do like a parallel, what to say that, thinking process in terms of what is your statutory requirement. I couldn't obviously cater for everybody. I'm just taking for South Africa. Then, of course, what is a company contribution? We've got also a part for company contribution. So if you're not familiar with it, I'm just going to quickly explain it to you. If or when a company hires an employee, they agree to pay a gross salary, isn't it? You get your gross salary. If you think about it, when you're hired on your payslip, it's got a gross salary amount. When you sign your employment contract, it has a certain amount that they have agreed to pay to you. And once again, it is your gross salary. I hope I'm not confusing you. If you look at your contract, that's the amount. You've got an amount that they agreed to pay to you. That's your gross salary. It, of course, could be broken into normal travel allowance, whatever the case may be. You might be also entitled to bonuses, to a bonus, but this is again at the discretion of the company. So the company agrees that they will pay you an amount. However, per legislation, per law, or the agreement with you, there might be amounts that they deduct from your salary, but this is a deduction. When I say deduction, it's not contribution here. When I say deduction, an amount that they essentially take off your salary to pay on your behalf, to either in terms of PAYE to their tax authorities, or for insurance to other companies. So these amounts are deducted from your salary, and that is nothing, that is not anything to do with the company. It's from your salary. It might be, of course, a requirement for them to deduct PAYE, but that PAYE is not a company cost. It is also an employee cost. So the deductions I'm talking about are employee costs, which the company just withholds. They pay the salary and then pays over to somebody else on behalf of you an amount, PAYE, medical aid, or any other. So that's how this you should read through. The company contribution. I want to move to the contribution one. The company contributions, on the other hand, is something that the company is required to pay over as a result of having hired you as an employee. So for instance, if you are in South Africa, your employer will have to pay in South African legislation a certain threshold. And the company also will be required to pay over some skills development levy. And as a result, it's also based on the salary agreed with the employee. What I'm trying to tell you is, as a result of hiring an employee, your employee has to pay a gross salary. Plus, they will also pay over certain company contributions as a result of hiring someone. So the total cost to company when someone has been hired is actually going to be, I'm talking cost to company. I'm going to add here to columns. It is going to be, I'm going to put here cost to company, CTC. It is going to be your gross income, how much it costs to the company to have you as an employee gross, plus I hope you're screaming at the other end, the company contributions. That will be the cost to the company. So, and you can scroll it down and then add a summation to it. The total cost, what it costs to the company to have you as an employee, will be your gross salary plus the company contributions. So you have to select for the first, for May, 06 plus AU6, which is the company contributions. And guys, I went to auto mode. I simply dragged everything down to get my 12 month and then added a summation. You can also copy over the formula. Just copy them over to wages. Please do trust me on that. I've checked out that it's the right column. That's the right column. And then perform the same process. I'm going to scroll it over and then summarize it. Giving you some time to do that on your side as well. So what do we have? A company figure for salaries, cost to company, and a figure cost to company for your wages. But what we want to get to when we're doing our reconciliation is the total employee cost, which is salaries plus wages, total cost to company for both wages and salary. So we're going to add up the total cost to company for salaries, that 5.9 million, add it to the company, total cost to company for wages. You should get a total amount of 17,588,978. So essentially, what you have just calculated is the amount that it costs to wrap up manufacturing to have all the employees on their payroll. So the amount they agreed to pay the employees, the amount that they have to pay also on behalf of those employees, and that is the total cost of 17.6 million. So I'm going now to again split my screen so that we can view, we can view both screen. So I want this as well, actually. Okay, here we go. So I have now my working paper showing my employee cost and the payroll. So there are two ways to do that. There are different ways to insert all our different balances. I'm quickly looking employee cost per payroll. So I'm going to show you the easiest way, where we also have a line called income and company contributions. Okay, so you can have the two amounts shown. I've shown you the total should be 17.5 million. So I'm just going to show you just now. So I'm going to add here income, company contributions. So if I add this here, actually, I'm just taking the summation of this would be your company contribution, 1.1. And if I locate, I think this is my total salary. No, this is deduction income. Gross income, if I add the total of the gross income, I've got 16,395,595.87. That's the income. And then this company contribution, that will be in the column AU. What am I doing? It will be 1,193,382.45. And this is the total 17,588. That's what we have calculated, and we're super happy. So let's add a comment here. This is coming from my payroll. Let's put APR. Let's go down there, agreed to payroll report. So I'm happy to add my agreed to payroll record. So this is going to tell somebody where we get this number from. I'm just keeping it a few moments there if you're busy also inserting your values. Now, looking at the difference, you currently have a 254,000 Rand difference. So now we need to go and look where does this difference is coming from, right? Because we now have compared our GL to our payroll, and we currently see that there is a difference of 254K Rand. So now I'm going to ask you once again to get your GL. We're going to try to find this particular difference. I'm going to try to go slowly, guys, but we are very short of time, so I have to speed up a little bit, but not too much. On the GL now, if you stand on your column A, so you're going to see all the different GL extracts for the different accounts that you have on employee cost. I'm currently on employee cost. The first one is your directors' fees and emoluments account. We can see that they've got a lot of general journals. We've got some debits and credits as well processed into the system, into the accounting system. So this is generally what it looks when a client processes an amount from your payroll. So just to show you with how easy you can do it, you can either scroll through. So if I look for example, your company contributions medical aid, and if I scroll just a little bit to look at the total amount, so there's a closing balance there of 314,155. Now, if you go back to your payroll now, we want to see that 314,000. If you go back to the payroll, I'm going to expand this because my screen is extremely small. If you go back to the payroll, let's try to find out this amount. So we're looking for, what are we looking for? I wish we were in a classroom so that you can answer. We're looking for your company contributions for medical aid. So let's look at company contributions. Do you see the medical aid 314,155? So this is how you can tie back from your GL to the payroll. Now, I'm sure some of you have experience in the room. This is a training exercise. Conveniently, in this scenario, our client has pulled the account, medical aid, and it is the same as the payroll system. And it was easy for us to locate the amount. However, sometimes the client might not use the same thing, so you'll need to inquire more and do some more calculations. Now that I've shown you how to locate that on Excel, it does require a bit of scrolling up and down from GL, looking back at payroll. I'm going to show you how with ease you can do that on Caseware Idea. And it's really in terms of efficiency. It's not only efficiency, but think about that client with thousands of lines. Are you going to scroll up and down? It's going to be a little bit difficult. However, if your your practice is thinking about using an analytics tool, you can also help them in their decision and say, okay, we know using Caseware Idea, for example, it's going to allow us to really go faster in terms of our analytics. So here we go, that company contributions medical aid, that was quite easy. So how did I get to that report? I simply took my full GL employee costs. Where is it? Sorry, my full GL. I did a summarization on the top of the screen to get to that report employee cost, and it has summarized everything for me. So company contributions, 314,150. We have seen that this account definitely ties up. So I'm not going to do that for every single account, guys, but I'm hoping that you will be able to handle this and go and check out the different sections. Do yourself a favor and please go through, even if it is on an Excel, go through all these accounts in the employee cost GL, agree into the columns that sit in the payroll report. Remember, you have both salaries and wages. So in some cases, you're going to agree the columns on the top, like here, I've agreed it company contributions on the top. For wages, for example, if I go to wages 10,523, if I look at the report, wages, once again, 10,554. So you're going to tally these from your GL and your payroll. So we have done one instance like that, but for now, for the purpose of the course, I'm going to show you a quicker way to identify the reconciling items by looking at the GL, by looking at the particular description, because now we have established that the client journals from the GL, we have established that all these do come to and tally to the payroll document. You also have debits and credit expenses, so you just need to think about it. So now we kind of know how the client standard journals work. Now we're going to go through the accounts and look for anything that stands out, any description that stands out. So let's start with the first account. We've seen that directors, fees and general director's fees and emoluments, we see that it's all general journal, normal salaries, plain salaries. In the comments area, you have also to look into the description. If you look at the company contributions, same as well, plain salaries, journals. For the medical aid, if you go to the provident fund, you also see the journals look pretty standard. What do you think? To what we have to the salary journal per month. So you can also tally it back. It's not going to take us too long. 161, AP 18. That one is done. Actually, guys, I've already done it. I've highlighted it, but you'll have to do it on your own because we won't have time for that. I scroll down. We also have the company contributions, UIF, same thing. But then when we come to the salaries gross account, if you scroll down a little bit, just to get these, there seems to be an amount or a description that stands out, which is different from the rest. That's this one, the compensation commissioner salary, which doesn't look like a journal, salary journal amount. And we also do not expect to see it coming here. So now what we have now discovered is literally one of our first reconciling items in the Excel. Now think of your actual client with thousands of journal entries. Once again, you won't have time to scroll. So what you can do on Caseware Idea as well, because I'm looking at the salaries gross. I'm going to close all the tabs not to confuse you. I'm looking at the gross salaries. Think you've got thousands of lines for salaries. What you can do is use a simple filtering. I can use the at is in E. We've seen that last time. It's a formula that say, okay, if there is any word weird, I'm looking for compensation. It can be any gift, anything. Find it for me. Then what this it did with that formula, it found for us this particular salary or amount that is standing out. So what this is the client has paid a worksman compensation because that is another cost to the company. If you are an employer, if you're hiring employees, depending on the industry and depending how much employees earn, you have to pay over a certain amount of the worksman compensation fund. And this is to provide sort of a fund for if an employee gets injured on duty, they can then pull from the compensation fund and be supported whilst they are recovering. We don't have that in our profession. It will be mainly for manufacturing. So this amount, we can see it from the document, from the GL, 26,000, but it's not coming from the payroll because, let me go back, clear that. That salaries gross, I'm going to total it again. 3,414,000, you won't be able to reconcile it back to your payroll because of this particular amount. So even if you look at the payroll report, there's nothing. Even if I do a control search, there is nothing that says workmen's. No, workmen. So there's nothing related to workmen compensation that is paid. So now what we're going to do is on our reconciliation, we are going to insert this amount on the top here, amount which is found in GL, but not in the payroll. right? I'm sure you agree with me. That's simple. It's in the payroll. We've just seen that, but it's not in the. It's in the GL. Sorry, but it's not in the payroll. So we're going to add it here on the top of the screen. What is the amount once again? 26,829.99. So let me call this workmen's compensation payment. This was salaries, right? In the salaries portion. So let's think about what fine should we add before we add that. So I've started with my GL amount. So that's my GL amount. We're saying that the workman compensation is in the GL, but it's not in my payroll. So I want to deduct it from my GL to get back to my payroll amount. So that's why we're putting a negative. We're putting a negative 26,829.99. Hope that's fine with you. It's in the full GL. Look at your Excel. Where's your Excel? Employee cost on the line 104. It's in there, but it's not in the payroll parallel system of the client. There's nothing under income that says worksman. Nothing that says worksman. Nothing was paid. So I'm going to deduct it over there. So now let's go back into we've discovered that entry. Let's continue on the Excel bonus provision. So what you see under the bonus, that account is quite easy to miss usually because you will see it as a general journal, but what stands out is the use of the reference prof. From an idea perspective, Caseware idea perspective, that would have been easily detected because under here, you could have, using analytics intelligence, it would have shown you that this is standing out as a provision. So it doesn't look like a normal salary journal. And you can see as well that it is very nice rounded figure. So the client here is providing monthly accrual for bonuses, which will be paid out at some stage. Yeah, usually if everything goes well, everybody will get the bonus in December, of course, if you're also lucky. And so the bonuses will be paid out in December. In here, in that scenario, they are accruing monthly bonuses. So when we're dealing with bonus provision, we would usually also consider if the client has, and this word may be familiar to you from your studies, if they have gotten a constructive obligation to pay a bonus. So this is a scenario that would arise because in the employee contract, the employer has a legal obligation to pay bonus because they've written in the contract that the employee will get a bonus every year. Or, and this is what this monthly provision will illustrate to you. Alternatively, a constructive obligation will arise when the company has paid a bonus every single year. So they have created an expectation that a bonus should be paid forever in the future. That's another type of constructive obligation. So because this company has a constructive obligation, let's say you've read all the documents, they are providing, wrap-up is providing monthly provision for bonuses in their accounting records, right? So if we look at this bonus provision at year end. So they would usually then pay, if we stay in our logic, they would usually pay a bonus around December if it runs over a 12-month cycle. So the client in our case is providing for January to April, and that bonus will then be paid out in December. Usually the provision will be sitting in your trade payables, and this is also where you're going to test for that, whether they have an obligation and test the actual calculation when we test the bonus provision for the purpose of our reconciliation. So there are two ways to deal with bonus provision. I'm going to show you, I'm hoping we have time both ways, because some of you will understand it in one or the other way. Some of you might feel it differently, but I'm hoping that you get the grasp of the concept. So if we go back to the reconciliation working paper, go back here. If we go back to this reconciliation working paper, what we want to do here is I've provided space for two calculations, calculation 1, calculation 2, for your bonus provision movement. So just giving you a few moments to go to the leave and bonus provision movement. Now, what we have seen in the GL is the bonus provision, and we have also, I'm going to put my cursor here and go back to the GL. We've seen the bonus provision, and if you scroll down through, you should also see your leave provision sitting somewhere here. Leave and bonus provision is another portion. Now, so of course, to avoid scrolling, you can use Caseware Idea to do that, but I'm going to need to go a little bit faster. I'm going to help you insert here next to this first calculation. Let's go first here. I'm going to copy that. Leave bonus provision. This is on your line 293. We've got a total of 720. So this is leave provision. This is from your cost of sales. Oops. There's a total amount of 750 and 20. So we are inserting here a negative once again because it is in my GL. It's coming from my GL, but it's not in my payroll. So I want to remove it from the GL to tie back to my payroll. You can also, another way to find this, guys, if you don't want to scroll, I really don't like to scroll, is to go to your cost of sales lead sheet. Here is your provision. The lead sheet is easier, right? Leave paid provision 720,000. So I'm going to insert it here. I'm sure that you found your bonus provision operating expenses, which is, if you go back to your lead sheet, negative 220,000. Remember, it's sitting in the GL, in the TB, and you want to remove it so that you can get to the figure which is on the payroll. Now, what's on the payroll? What has gone through as the actual bonus paid off out of your payroll? You can tell that to me. If you look at your payroll 12 monthly report, in the column E, there's a bonus column. There's an amount of 281 and another amount of 643. These are both salaries and wages, so I can add it. Let's use technology. We've got the actual total paid out in December, they announced the bonus paid out of 924,637 cents 50. So I'm going to move over, I'm going to copy it, move that over to my working paper and add it here. And this is the bonus actually paid through payroll. This is 924. Now, this gives us a difference of 15,362 that we would like to move that over to the top here. Less amounts. So this one in GL, but not in payroll. So I can take this 15,362. So this is leave and bonus provision movement. I can add a comment here and say refer below. Refer below. For now, let's just add refer below. So this was one way to work this out, how to get the actual amount paid from the payroll system, compare it to my GL. The other way around would be, in a few moments, I'm going to show you. I'm just giving you time to absorb that one. What we have calculated actually is an over provision on the leave pay and bonuses. Over provision because we had an actual bonus, compared it to what was provided, and we've got a 15,000 rand sitting in my GL, but not in my payroll. So that's why we subtract it from the GL to get the payroll. Okay. Now, the alternative way of doing that calculation is to, if you scroll, it's calculation number 2 here. I've provided some space for you, is to actually compare from the liabilities. Look at your liabilities amount, what was your provisions, and then do your comparison with the closing balance. So what you might do if it is your firm's policy of you, if you understand it better, so you will have, actually your clients will have opening accruals for leave pay and bonus and closing accruals for leave pay and bonuses. Any movement will be the movement that didn't go through payroll. If we go to the document manager, let me show you the second way. If you go to document manager, look for the folder 600, current liabilities, trade and other payables, and 630. So what we have, we've got accrued leave pay, accrued salary. So remember, when we raise a provision, when the client is doing a provision, we debit expense and credit provision account. The expense that we've seen was in the GL expense, and the other leg is sitting in trade payables. So if you think about it, we've been working in the expense side so far. Yeah, last time we were doing expenses testing. The other side, the credit side, would have gone to our provision leave pay, which is sitting to the trade payables lead sheet. So how do we deal with that in some audit firms? So you will simply take the opening balance. Let's start with opening balance for accruals, leave pay accruals. Let's start with leave pay. We're going to take the opening balances for leave pay and bonus. We want to take that and compare it with the closing balance. So let's insert all of these figures back on here. So this is going to be opening balance of accruals. We've got opening balance on leave pay accrual. What is it? 194,000. 194,890.90. And we have opening balance on bonus accrual. I'm just going to do Control D to get that. Opening balance on bonus accrual. And we've got 752,446.36. And we can do a summation here just to get that opening balance because that's what we want to get. And we want to compare it with the closing. I'm just going to copy this here and replace opening with closing. I hope I don't need to explain this to you. That's just Control F and you select the replace option and it is going to replace for this. Make sure that you highlight those 3 cells, eh? And we compare it with the closing. So let's start with the closing. We've got here closing leave pay provision, 194,890.90. Bonus accrual, 767,808.86. And of course, let's do a summation of this as well. And what do we get? 15,662. This, what is that, is the same, as you can see, is the same amount because we've seen the portion that goes to the balance sheet should be the same. So this is the difference for the movement in accrual movements in accrual which did not go through payroll. It's 15,362. Now we've worked out the movement being the difference between the opening and the closing balance. So you can do either way, but to tell you the truth, from my experience, most of the audit firms will be using calculation number 2, that one, because it somehow it's easier to perform because you've got everything already than going through the listing. Once again, I don't need to reinsert it. I've already inserted it here. It's a negative. We are going to remove it from our GL because it's much more compared to our payroll. It's an over provision. Right. So now let's go back to the GL. We're done with the leave pay provision. Okay, let me scroll up. Bonus provision we've seen. Company contribution, the CISL, I don't know how to pronounce that. Doesn't look a dispute levy, doesn't look anything weird. Standard journals, same for development levy. You've got your salaries and wages, your provident fund as well, look fine. And you can also check it back to your payroll. You'll see it's going to tally. I'm not going to do that because I'm just conscious of time. Company contributions as well. Looking at your wages gross. I will just take a few seconds to do that before we go for a break. So for the wages, if you scroll down and look at the wages, yeah, doesn't look like our standard. beautiful, journals that we've seen, and you can see the description as well. They are not the same across. So what we can do, and because there's quite a bit on that, let's highlight this journal. Let's copy the full wages gross. I'm just copy everything and put it on a separate worksheet. We're going to work from that to analyze anything that stands out. We are going to use Excel, but of course, I'm going to give you a heads up on how to do that on Caseware Idea as well. Okay, guys, it's already time for the next break. So let's take a 10 minutes break now. I'll take a cup of water or a glass of water. And when we're back, we are going to go through the rest. Thank you. Enjoy your break. Wow, this has been the fastest 10 minutes of my life. Welcome back, everybody, to testing your employee costs. When the last section we did before going to break is segregating our wages gross listings from the general listing. We've added it on a new sheet. Guys, we've got only less than 50 minutes to go. There's quite a bit for us to cover, including the detailed testing. We're still testing for completeness, so I'm going to go a little bit faster and maybe skip some sections. And of course, you can try it on your side. I'm just going to explain the concept. First of all, remember what we wanted to achieve. This is what we've been doing. We wanted to make sure to reconcile our payroll back to the general ledger. We are looking at the wages growth. So I'm going to ask you to add a filter. You can highlight the row 2. Please apologies if I'm a little bit slow on Excel. It's usually faster and better to do it on Caseware Idea. But let's do Excel for now and concentrate on that. So what we're looking for, if you filter column B, I'm sure you're now familiar. If you click on the little arrow button, what usually goes into our payroll will be the general journal. So if you look at the general journal, what can we see here? We can see all the amounts that the expectation and as per our theory would go through the payroll. What I'm currently doing whilst I'm talking to you is simply having a summation of my debit and credit. I've got a total of 10 million, which if my theory is correct, we should have this 10 million, 10.3 million back to the back to our, what do you call that? Payroll. So if we go back to the payroll, let's look at the wages section. What do we have? We don't have 10.3 million. Let me go back here. Based on wages gross on the GL, I'm comparing it. What do we have? We only have 10,330,000. Let's have a difference between the two. It's giving us 643,000, which is actually, you would recall, is our bonus. Yes, these guys are lucky. They got bonuses. I can't forget that. So this, we've already tested the provision for bonus. So that's the difference. So what I'm going to say here in this particular scenario is I'm happy with what's in that GL for these amounts, because if we add back the 643,000 rates, we're going to get it back. So for me, these, if I highlight these amounts, these should be correct amounts. We've tallied those amounts. If you highlight these, I would like us to color these. Before we color, I always like to do that. I like to go to special. So on your home tab, select, go to special, then select visible sales only. I'm gonna put that into green. I've looked at these figures, it tallied back to my payroll. Remember, we want to make sure that it is complete. So we've done that. We've highlighted it. Now let's clear our filter. We've got, and put on OK. We've got some other items showing here. So let's start with the CB4 payments. What we can see here, we can see some other journals, some other amounts. So these are cash stuffs for a total of 188,000. What's standing out for you? I'm hoping that it is standing out very clear. Is that compensation, commissioner wages, 128,730. You've seen that in your, how do you call that? When we were doing the recon for the salaries, we had that compensation payment. I'm not going to explain it again. So I'm going to take it here as well, worksman compensation. I've done Control D to copy the cell above, call it wages. So it is sitting in my GL, but it's not in the payroll. Remember, I've done a Control F to look for it. I didn't find it. So I'm going to remove it from my GL to get my expected payroll amount. So I'm going to remove that from here. All right, so I'm going to highlight the cell. This is done. So if I highlight all of this, I've got 59,414. So let's look for that in here. Okay, let's just, I'm going to look for that. Okay, how much is it for? Okay, let's go. We're coming back to that wages in a few moments. Let's again go to the petty cash one first. So the petty cash would be, again, some cash wages. I'm going to remove these. It's confusing me. Some other wages. So what I'm expecting, if I select back everything, all those amounts which have not been selected here as checked back to, I could have selected, you see, I'm not good in Excel. These would be figures. Okay, I'm going to remove those 350 as well, guys, because this is something, this is just a reversal. I'm just going to remove these and just pick up. Actually, I could simply filter by color. Filter by color, no field, and summarize it. See how confusing Excel can be sometimes. So what we're seeing here, and I tried to look for it as well on purpose on my payroll, these are cash wages, like money paid out of petty cash for some casual workers. It's not, these people are not going through our payroll. So here, what's happening is those 83,749 of cash wages that have gone through our GL, but not in our payroll. And it's, again, a reconciling item. So if I go back to my reconciliation, and I tried to look for it, and you've seen, I didn't see it. So I'm going to put that cash wage here, cash wages, negative 83793.25. Wow, our differences is getting smaller and smaller. So, yeah, that's how you would have done it on an Excel. Now, very quickly, on Caseware IDA, it's going to be a little bit more simpler process, because if I close all of these, and if we go to salaries, not gross, so gross we've seen here, not salaries, sorry, wages gross. I'm quickly going to go for wages gross. This is my wages gross with a total of 10,553. We've seen that, right? This is what you've seen on Excel when we filtered by, not the filter, but if you add up everything, oh my gosh. I don't know how I was doing that back in the days. 10,523. This is, if you should follow my cursor on the right, this is the total of that database for wages gross. Now, the test was, I wanted to see whatever is not a general journal, what hasn't gone through to your payroll parallel system. So what I simply did is I've run out, literally, I've done an extraction whereby all the entry types are not general journal. As simply as that. This is what we've got, a total of 212,563. And if you look a little bit, scroll through, you've got your petty cash payments, the compensation for your commissioner wages. So if I look at my reconciliation, and if I add those two together, compensation and cash wages, the sum is giving you bottom right of my screen, 212,563, and that's the amount. See, it's gonna go a little bit faster in case what I get. Any cases, we've got our differences here. We now have a reconciliating item, which is a difference actually, which is 298,000. I'm going to take you literally where this is sitting. Usually it is an acceptable difference because it's below what's trivial amount. However, if you want to resolve that difference of 298, we're just gonna quickly show you where this difference is pulling from. It's actually a contribution or an amount that is in the payroll but not in the GL, because we've tested everything which is in the GL. I'm going a little bit faster, guys, because we don't have much time to talk. So if you look at your GL, at your payroll, actually, there is an amount that will stand out, which is the loan, not Facebook. It's the loan to your employees, the fringe benefit loan of 297. We haven't seen any loan into our GL. Do you agree with me? Yeah. So that's why I can literally show you that easily. And of course, you're going to go and discuss and learn further about the loan, because you can clearly see it's a fringe benefit. There are deductions in terms of loan, but please take away that I have ticked all the contributions there, all the items on my payroll back to my GL. The only thing that is standing out, which I didn't see on my GL, is that 297.93. So I'm going to put that here. Again, just remember what sign you need to insert. What we're saying here, it's in my payroll, but not in the GL. So I'm going to put that negative, because remember, this portion is for payroll, right? We said agree to payroll. So I need to remove it to the payroll so that it agrees back to my GL. So I'm going to call that interest-free loan, fringe benefits, accounted for in payroll. And this is clearly trivial. We've got this amount from our payroll. Now the next step will be really to complete this working paper, this reconciliation working paper, because we've got everything reconciled. We can now go for our detailed testing. I'm going to go a little bit faster on that. Please make sure that you do remember where I'm picking up. So for that amount, remember, we can't leave amounts just hanging up there. We need to give more information to our team member. Where did we get that? So I'm going to say agree to GL account, salaries gross, and I'm also going to insert the account number. Let's make it comprehensive. Same for this one, agreed to GL. This one is wages gross. This is, if I recall, it's 440005. And we can add a note here. Let's call it N1. The note that we want to add is that worksman compensation. We've talked to the EP team. I'm going to put N1 here. We've talked to our AP team, accounts payables, they say that they are tested in trade payables. Guys, you have to confirm if you're not sure. Ask to your team members, your supervisor, whether this will be tested elsewhere, and you can add your comment that this compensation is tested as part of your trade payables. Let's see that one, leave provision move there. So we've seen refer below. That's the calculations that we've seen, the movement. Because, like I mentioned, most of you will be using the second method. That is, you're going to test it in trade payables. It's part of trade payables. So I'm going to add here as well. Balance at year end tested in trade payables. Of course, you cannot write it if it's not the case. You must go and check it out. In terms of cash wages, so I'm going to put cash wages paid. Agreed. We've agreed it to the account number, which is the wages gross. I'm going to add wages gross GL accounts. Once again, this is immaterial. It's falling below my trivial misstatement. Which is, no, that's not true. What am I saying? Okay. Righty. Immaterial because we're really testing for our financial statement area based on performance materiality at 800,000 Rand. So yeah, I could have left it as immaterial for that one. Alrighty, so now we've completed everything. Let's now sign off. I'm going to sign off as SP Sandrine. If you press Control on your keyboard, Colin, it's going to give you your date. Control on keyboard, Colin key. I don't know, it's next to my Enter key on your keyboard. You should get your date for signing off. And of course, we can close this. There's quite a bunch of stuff that we also need to consider. Of course, I'm going to share with you. I've already shared with you the presentation. We've got some more items that we cover over there. So please, let's save this. I'm going to close it here as well. And on my working paper, document manager, I'm going to sign off as completed by for the employee cost reconciliation working paper. And of course, on your work program, we're also going to sign off. I've already done it for you, where we've reconciled any differences. That one is already done. The next step, I'm forwarding just a bit because of that. The next step will be to do the actual detailed testing of the operating expenses. So some of these steps have already been done for you, because as you can see from the amount of time that it takes for us to do the reconciliation, we don't have time to do everything now as a practice. But we're going to explain as we go. So the next step that I would like us to go to, I'm going to do one or two. It's already 1:30. So next step is to go to procedure number 6, where we're going to deal with the actual payroll system and testing that the payroll system has accurate information, because now we know that the payroll system and the GL works. We're comfortable. Now we want to test that the payroll system is accurate, meaning that the amount that flows through into the GL, into the TV, into the FS is actually accurate. So what we've done, we've obtained the salary register summary sheet. We also have payroll reports I'm going to open with you. We are going to ensure each payroll period is included in the listing, and we're going to select a typical period. You can use Caseware Idea to perform that selection for you to perform the test. For the purpose of today's case study, we have selected February out of our 12-month analysis. So please open the Excel that I've distributed to you, which is the February detail report extract. Double click to open. It looked like a pretty normal month for the year. If you scroll down, so totals extracted from February 2023 detail report looks a pretty normal period for the client. We selected February and we're going to perform the steps that are relevant for our test. We've selected a sample of employees and we are going to verify that. So the next step will be to link this to your working paper 753. So please, for me, open your employee cost detail testing. This is found on your document manager. I've also already inserted some elements for you there. So please take it as is. I'm not going to explain again what's on the top of this. What you need to remember is the sample size selected. We've selected 4. It came from the payroll reports. How do we know the population we are working from is in the payroll report is accurate, complete? How do we know that? How do we know it's accurate and complete? It's based on the reconciliation we've done on GL and payroll analysis report. We've been reconciling the differences, so we can add just a comment there that they can refer back to 752. Okay, and just now, if you are looking at your audit work program, I know it, in procedure 6, we do have completeness, occurrence, accuracy evaluation, but completeness was not a risk. We've seen that in the reconciliation that we do. So now let's work out what our population was. So this, you will get all of these from the lead sheet. There's no need for me to show you how to get that. We've done that together. So the population is the same. The sample size selected is 4. The sample method that was used was a haphazard selection, and we selected 1 salaried employee in and then 3 waged employees. So this is the part where, very important if you're noting down, that you need to follow your firm methodology. For the sample selection and the method, if they have used Caseware Idea, you've got 4 different types of sampling methods, so please adhere to it. Now, we are also, by the way, for those of you wondering what is sampling, we also have a session where we talk about sampling methods. So it will come in the next few weeks. Coming up, the reference from our work program, 70-50-10, and the procedure that we're performing, this is procedure 6. Please make sure that you update accordingly. I did it on purpose. Am I joking? No, I did it on purpose. You have to make sure that you read through every single line to make sure that you can complete. Right. Now, first, we are going to make sure that the detailed report we are working with agrees with the reports that we are listed. So if you open your total cost of company 12 monthly report, we've been using that a lot. I'm sure you're familiar with that. If you look at February, that's why I've highlighted February. I knew we would not have enough time. If you look at February and we add AU 32 to O 32, you're going to get, and also you add, that's for the wages, and you also do the same thing for gross salaries and gross company contribution. Remember, this is the total cost to company. You're going to get, I've already added it for you, 1,379,000. And the reason we're doing this is we want to make sure that the detailed report that we've looked through flows nicely to this analysis report. So if I go back here, total cost to company per 12-month report, this is where I'm going to put it. I need to copy it again. Sure. Doesn't want to work out nicely today. Yes, and the detailed cost per the detailed report. Try to find this out. Let me know if you have the same amount. Of course, I haven't mentioned, guys, costing and cross-costing, the little hat icon, but I'm sure you would recall from our previous sessions. Okay. Looking at the detailed report, what's the total cost to company? It will be the income plus your company contributions. That's the amount. And let me tie it back here. Does it look the same? Yes, 100% success. So we can continue to do our detailed testing. So remember, we are looking at the sample. It's not the full extract. So per employee. So if I look again, where is it? Here you go. We've got 4 employees, George, Mbasso, Sitol, and Justpress. We've got their different incomes, their different deductions, and the company contributions. So the assumption will be my detailed report flow through my 12-month analysis. So it does. What I've done, looking at these salaries for these different sample of people, I'm not going to do that with you, but explain rather, because time's running, guys. I've inserted this information extracted from my detailed report on my detailed testing worksheet. This is the worksheet that your firm, as per your firm methodology, will be inserted. So what I've done, I've copied in the sample, the name, surname, so I know that who's the different people, the employee code, the rate, and all of these incomes, company deductions, and also here the deductions are coming from the payroll sheet. Please do yourself a favor and you can also copy and paste the information onto the working paper to perform the different detail testing. So the yellow cells actually was to be without the different figures. What I'm going to add as well, I'm going to assume that we were able to cost and cross-cost our different information. I'm just looking at the time to see whether we have at least one. So let's do at least one. Okay. Apologies, guys. So let's look at Brett George. On my details, here is Brett George. The rate of Brett George is 100,000. The normal hours, 100,000. This is what we've added here. There's nothing over there. In terms of deductions, let's look at the deduction. There's UIF, 177. That's what I've put it here. And also 1,000 in terms of company contributions. Sorry, guys, that's the company contributions. In terms of the deductions itself, if you scroll down, same here for break, you've got your UIF, your PAYE. This is coming here with a total of 32,000. With a total of 32,237. Okay. And if you look again at break jobs, there's the calculation for tax. I will not have time to explain this to you. We've got a very nice slide that explains everything to you. Please, I'm going to count on you to go and check that through. Now that we have all the total cost to company, it's adding up. I think by now you must understand what's total cost to company. It's your gross salary plus any contribution that the company does on your behalf. That's 101,000. I'm now going to, of course, go through and check that this is, of course, costed and cross-costed. I'm going just to copy it here and say, this is what we've done. We've done the costing and cross-costing. We're happy with that. It tallies back to what we've done. So if you look at the different titles over there, you have to change it to section 6, of course. It says you've done the cross-cost and cross-costing. You've also checked out the existence and verified the existence of your employees. So I've inserted it here as well. So what we did, what we're trying to say, physically verify, we inspected the site contract, the copy of the employee ID. You may also go to the employee records and also go to, just say hi to the Mr. Employee. Who is that? Great. And say, hi, Brad, how are you? Just to make sure that he, does exist. And you could also ask him his birthday. So you would verify physically, see that the employee is at the premises of the client. You could also look at the latest and make sure that there are applications for this. It has actually happened during the year, and this is the way that we know that these employees that have been selected from our soul pool actually exist, that they are not fictitious employees, real people. But please just note that of how it was in terms of the audit work program. So these are all inserted. If I look at the work program here, these are all inserted here and asking you to perform all the different procedures. And this is what I've translated in my work program. I just need to change the 2 to 6. The next one is admin dispute and technology fees agreed to bargaining council. So what is happening here is we are going to use the legislation to ensure that the necessary deductions or remittance have been done. I'm going also to sign this, oops, I'm repeating myself. I'm going to sign this off. As cost and cross cost, though, if you scroll down, what you're saying here is no exceptions noted. By the way, there's also a second part, bottom of the screen, that says all the EFTs, you've checked all the deductions that were done on a timely basis. You know that the scandals happening with deductions, right? Some companies are deducting from the salaries of their employees, but they're not remitting it. That's the danger here. That's the risk. So what we've done, with part of the audit procedures, we've done all the checks based on EFTs as well. Okay. Going back now to information from the payroll here, I'm going to at least guide you with the completion here. So for this 9th shift, we are going to use that we've done the cost and we've also recalculated. So I'm going to use that. Let me copy that first. The expectation from you guys. I don't know why my paste is not working. Try it again. Paste. So the expectation for you, of course, is to reperform the calculation. So I'm going to say we did it for everything. So we are going to use the different rates applicable. I've inserted as well in the slide around the tax, how to check the tax and leave accruals, how do you check it all. So please do yourself a favor and go and read through. If you have any questions, you can of course let me know. Just need to do that here. Okay, so what we have also performed for you, so if you go to the bottom of your working program, so a working paper actually, scroll down and you will see I've already mentioned it, procedure 6C. This is to test the deductions. We've already done all of that. In the Feb payroll, so if you look at the Feb payroll, we'll go back to the Feb payroll. If we add the cell B75, the sum of all of these should be 350. These are the deductions that were made. We went through, of course, over to the bank statement, make sure that is so. And we've documented what was the date, what was everything. That's the part here. That's the part where we've inserted everything. I think I'm repeating myself here, but yeah, this is that part. Guys, we've already at the end, there's so much for me to take you through. So I'm going to ask you from now on to please go through this slide, which is talking a lot around employee tax, what to do. So I'm going to take you through that, and this also tally back to the concept of the procedures that you're expected to do, the deductions that you're supposed to test in the working paper and the work program. Employee tax, what should you do? This is a compliance procedure. The PAYE is paid by the employee. It will help by the company. If we're talking from a South African perspective, SDL is paid by the company. UIF is paid by both the employee and the company. Employee portion is withheld by the company. And remember, guys, if you're from another jurisdiction, go on their website and have a listing of all of these compulsory or compliance deductions, and you can then apply the knowledge. For Mauritius, for example, the Mauritius Revenue Authority's website, we've got a very nice listing of all the deductions. The amounts are payable on the 7th of the following month, unless that is a weekend, then the last working day before. Therefore, year-end, there's usually an accrual for PAYE, SDL, UIF, which is unpaid by year-end. We test the calculation of amounts in the detailed testing. So you will recompute the different amounts, and that was what we're supposed to do, but there's a lot that we can do. There's so much that we can do in 3 hours time. At year end, we agree the accrual to SARS. SARS, it is the South Africa Revenue Services, and the payments to the bank statement of the year end. Accrual, you should know that by now. will be in trade and other payables, usually tested with employee cost testing. If the company paid PAYE, UIF, SDL before year end, there will be no accrual. That's a typical example of a statement of account for PAYE, UIF, SDL. So what you can see on my screen is the employment taxes statement of account. This is where you can look at the different statement period, the transaction period. You can look at the details, what was declared, what was paid, any liability, any movement. If you don't have that type of document, please feel free to ask your team members, can you get the employer, declaration form for the taxes? Also, team members also look at your previous working papers to get these as well. A quick mention on the leave pay accrual. A leave pay accrual arises when a company is obliged to provide paid leave days. It does not include sick leaves. Clients will usually have a schedule for this. Usually you could ask them the schedule with the employee name, the rate per day, the number of days owed to the employee. Can be in the payroll system or any other parallel system where they keep records of any days that is due or accrued per employee. You can test the completeness of the list by comparing the number of employees to payroll records. Number of days multiplied by rate per day will give you the accrual. The tests, both of those parts of the formula will be days, test to leave records, rate per day. You can recalculate, you can agree the rate, which is tested in the detailed employee testing. So you've seen, I've got the listing from the sample from wrap-up manufacturing. It had the rate per day. Usually, in most firms, you will have a sample which is tested for your leave schedule. If you're using Caseware IDEA, you can perform 100% testing within seconds. The leave pay accrual testing also involves agreeing total on leave schedule to the lead sheet. Go and look at your trade and other payables lead sheet and look at any accrued leave amounts. Remember that errors must be projected over the population when you are testing a sample. For the director's remuneration, this is an extract from your Companies Act South Africa Section 30, where the remuneration is defined, the benefits received by each director, all the amounts that make part of the director's remuneration will be detailed in there. Please go through and read through for your own jurisdiction, and you can then, from using your first methodology, and also having an understanding of what is included in the remuneration of the director, and also what you should be testing. In that scenario that we're showing to you, the above requires a disclosure on group level. So if Director A is a director of holding company and a director of subsidiary, Director A remuneration is disclosed in total. The whole rem is disclosed on the financial statements. Guidance will be available on the many options regarding this disclosure. Research is your friend. Same for Mauritius. The Companies Act also requires the disclosure of the amount of fees paid to the directors. In Mauritius, I believe it's a whole amount. It's not detailed. Some do voluntarily disclose it, but yeah, research is your friend. Please make sure that you research. It's already 56 minutes per the hour. I've seen that we've got in the chat box the form for the survey. Please fill in the survey. We look at the survey. We try as much as possible to cater for all your requests as much as possible. But as you know, sometimes it will, like the employee cost is so interesting. There's so much to say. It will be nice to have an 8-hour session, isn't it? But it depends on really, will you be able to stay with us for 8 hours? I'm able to. But again, this session is made for our new users, our new intakes. So yeah, we're looking forward for your questions. And before we leave, and before you leave, guys, I just want you to reiterate, if you were there yesterday, there was a prize to win, and today as well, for all of the attendees in the room. We would like to give you gifts. Now, how do we give you gifts? We would like you to post a personalized message on LinkedIn mentioning the webinar Get Ahead, and you will be able to enter and win an amazing prize. We're talking about Take-A-Lot vouchers. We're talking about the chance to have 8-hour free consulting with myself, with Renee, with Helene, anyone from the Caseware Africa team, consulting team, for your audit needs, for your financial reporting needs. I want to say a special thank you. Yesterday we had 2 gentlemen. I'm sure I'm hoping they're in the room, Jose and Anton, who has nicely commented, your gifts is on the way. But today I really want us to stand up and say,